Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to that closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. And Carol, we are around the highs of the day on all of the major indices here. Definitely a much more bullish sentiment here on this day than maybe what we saw just a couple of weeks ago.
Yeah, and as we talked about earlier, Romaine, and something that you like to point out, I mean, it is a broad-based rally that we're seeing most of the major industry groups, and we'll get into it shortly, in the S&P 500, though, seeing some gains out there. So investors kind of finding opportunities in lots of places, Tim.
Yeah, it's pretty remarkable to see this rally since the 14th of March. We're now only 3.5% off of all-time highs on the S&P 500 right now.
You know, Tim, we've been joking all day about the great yield curve inversion that is happened and then it's over.
That yield curve is no joke, Taylor.
On a more serious note, I think a lot of investments and economists will get to this, I know, a little bit later on the show. We're looking at how deep it inverts and then, of course, how long it stays there as sort of a true tell sign of sort of the future.
Do you remember where you were when the yield curve inverted today on the T's, 10s? Oh.
Don't.
Not in front of her IB, unfortunately. Having been counting us down for that hour before. Blinky, you missed it. Maybe it'll invert once again, but we do start to see, of course, the fundamentals not looking too bad when you look on a day of data with consumer sentiment looking a little bit better. The JOLTS data, once again, just showing how this labor market fires on all cylinders.
And you remember just 3 weeks ago, I was looking at this earlier, you only had about 20% of the S&P 500 members that were higher on a year-to-date basis. As of right now, at the closing bell, that number is basically more than doubled. You've got about 40 members right now that have managed to get back above the waterline on a year-to-date basis, and there are quite a few others, maybe another 10, 15% of the index that is really only a few ticks away from erasing all of their losses so far for the year. As we stand right now on the day, the Dow Jones Industrial Average going to finish higher by about 1% or 339 points. The S&P higher by 56 points or 1.2%. The NASDAQ higher by 265 points or 1.84%. And the outperformer of the day, well, you're going to give that Oscar to the Russell 2000, 2.6% higher on the day as you start to see bids come back in to some of those smaller cap cyclical names.
No acceptance speeches, please. All right, let's get to the S&P 500. As we said, broad base, so 437 names in the S&P 500 posting some gains today, and Taylor just about 68 lower.
Yeah, Carol, it's so interesting. On sort of a sector level, we talked about this a little bit earlier, really, really broad-based, just 2 notches down underneath the surface of that main index level. For our radio audience, the sector winners, the sector losers, it is all green all across the screen. So even the underperformers still actually gained on the day. Let me just start with some of the winners. It's consumer durables, it's real estate. Maybe that feels a little bit defensive, inflationary, right? You're up 3.5%. You have some technology in there. I don't want to steal your thunder, but I think Apple's on one of the best winning streaks that it's had since about 2003. I'll migrate quickly down to the bottom. Some of the underperformers are still in the green, but it's the dividends and the banks that sort of is what you would expect on a yield curve flattening kind of day. There is one sector, Carol, down in the red, only red one here for the day. Energy, though, you're off about 0.5%. Oil really sort of helping drive all of these lower.
Yeah, but it's so much higher rate for the year. Hey, you mentioned Apple. Let's keep in mind that winning streak. We haven't seen something like that in 20 years. So there's lots of discussion about whether we should read too much into the move and what that means for the overall tech sector. Having said that, I've been looking at some of the companies that are going to be reporting earnings after the close today. Lululemon among them, rallying up about 3.7% in today's session. Keep in mind the CEO did warn back in CEO about the Omicron variant limiting operations. So we're going to be watching to see if they outperform there. RH, formerly Restoration Hardware, we talk about them a lot. They're down about 30% so far this year, but they're up about 5% today. Keep in mind about 16% of the float is shorted, so we'll see whether or not we see some outperformance there. And Chewy is a big short. About 30% of the float is shorted. Again, also rallying about 4.5%, so we'll see if we see a kind of short squeeze.
And one other one we're watching, of course, is Micron. Those earnings crossing the wire right now. It does appear that the company did beat for their fiscal second quarter numbers. Adjusted EPS coming in at $2.14. The street was looking for $1.99, so a beat there on that measure. Cash flow from operations, $3.63 billion. That's a little bit lighter higher than what the street was looking for. They were looking for about 3.95 billion. Not seeing a forecast just yet, but we're going to keep an eye on this, Tim. Micron shares higher by about 5% here in the after hours.
Yeah, also keep an eye on shares of Lululemon as well. We'll get earnings from Lulu soon, as well as Chewy, among others. Hey, Taylor, you mentioned the broad-based gains in the S&P 500 today. It was a tough day to actually find notable decliners, but shares of fertilizer stocks taking a hit today as de-escalation in the war in Ukraine. A pullback in the invasion could help ease the disruptions to the global fertilizer trade, potentially relieving some of that market tightness that we've seen over the last few weeks. CF Industries falling by 5%, still though up more than 40% since February. Also keep an eye on shares of Ball Corp. Some more Russia-related news. The metal packaging provider seeing its shares fall by 2.6% today after it said that it was reducing operations immediately at 3 manufacturing facilities in Russia and pursuing a sale of its Russian businesses to a new owner. Unclear though how much money it will be able to get and whether it'll be able to get the cash out of the country. And then GameStop shares finishing the day down by 5%, finally down after being higher for 10 days in a row. Its longest rally since 2010, up about 140% since March 14th. Return on the meme stock?
Meme stocks, they're back. We're calling it.
They really are.
AMC on the higher side, a number are getting caught up in that particular retail frenzy trade. Meanwhile, though, I look at what's perhaps not had so much of a frenzy today, and it's the Bloomberg Dollar Index. For once, it feels as though the entire day's trade was dictated by hopes, by optimism surrounding Russia and Ukraine, whether or not we're seeing any sort of a pullback, a curtailing of aggression, particularly around Kiev from Russia. Many more cynical in terms of government leaders, but the market looking far more on the bright side, and that meant that you didn't want the haven that is the Bloomberg dollar. Went down by 0.6%. You even found that the yen for once pushed higher, having been down under pressure for so long in terms of different monetary policy outlooks from the Bank of Japan versus the Fed. The yen was up 0.8%. The Swedish krona significantly outperforming, more than 1.8% higher. Now, Icelandic krona, make of that what you will. But what we do also see is actually a day where we see a pulling back in terms of commodities prices for exactly the same reason, because we're hopeful what happens between Russia and Ukraine. What that means is zinc's off by, Brent crude off by 1.25%, steel falling by 1.25%, metals fall lower, agricultural prices fall lower. And we also see, well, again, the bond rout was happening worldwide, but perhaps not so much on our shores, Taylor.
Certainly not, Caroline. It actually was sort of a day of price higher, yield lower, except for the 2-year yield, where we'll just hit this quickly, up 3 basis points on the day to a 236. The real big story, of course, then was how close we're getting on the 2s, 10s, just 2 basis points away, because you have a 10-year yield that migrates downward on the day, 7 basis points to about a 239.
And going back to those Micron earnings, the share is still higher by about 5%. Those fiscal 2Q numbers did beat. As far as the guidance here for fiscal 3Q, adjusted revenue, the guidance being given is $8.5 to $8.9 billion. The street was looking on average for 8.2. As far as EPS, the guidance, $2.36 to $2.56. That's the range that the company is giving. On average, Taylor, the street was expecting $2.24.
Don't make jokes about Lululemon shoes, Romaine, because this is a company that just continues to, I think, prove its worth. Take a look at this. They're looking at fourth quarter earnings per share. That was, of course, the previous quarter well ahead of expectations, $3.36 versus estimates of about a $2.52. That was a year-over-year basis. But it really has been about a big margin story. On the fourth quarter, margins are at 58.1% versus estimates of 57.9%. And really forward guidance when you think about next quarter, that first quarter net revenue, $1.53 billion versus estimates of $1.48. So really guiding not only first quarter, but also full year net revenue, Caroline, higher.
Lululemon's shoes might be in fashion. Tell you what else is in fashion.
What's that?
Stock split.
So hot.
RH.
Stock splits.
RH announcing intention to execute a 3-for-1 stock split. We were just hearing, Carol, you had RH on your board, and now it looks as though they're following the Teslas of this world, the Amazons.
Yeah, right. We keep seeing companies do that to potentially make, I guess, the share price accessible to more investors. But I mean, this is a stock that's been under pressure. It has a high short position. We know, we talk about them, certainly playing into all the home buying that's going on. But the stock's up 5% here in the after. Our stock closing at 385 and change in the regular session.
Yeah, do we see a similar investor reaction that we saw from Tesla and from Amazon shareholders after?
Well, for a stock that's down
remains
28% on a year-to-date basis and 47% from its all-time high, I'm not sure accessibility is the main issue here.
Yeah, that's a really good point. Hey, when it comes to restoration...
So why do they do it then? So why do they do it then?
It's a good question. You're wearing the turtleneck.
Well, Matt Levine had one story that, of course, we know it's not always about fundamentals because you can buy proportional shares. Carolina, I would argue that we get him on the program first thing tomorrow because he does say that within the options market, actually, sometimes some of those round numbers make sense when you're thinking about some of the calls and the puts. So certainly if you're just buying a stock, yes, nothing fundamentally has changed. But there is a bigger, deeper story here when you think about the retail investors in that derivatives market.
Do we care about Chewy? Those earnings
course
are out.
we do.
Yeah.
Those shares are down pretty significantly, down 10%.
Yeah, and there's been concerns about inflationary costs. I want to just point out Berkshire Hathaway in the 13F filings show that they had boosted their position in the fourth quarter.
No stock
When
split
is
for
Berkshire splitting that stock?
That's what I was thinking, Romaine.
Are we
Fractional
that would be the mother
shares,
of all stock splits,
fractional
right?
shares.
All right. I'm out of here. Yeah, Chewy's down about 11% here. All right, we're going to run, guys. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place tomorrow.